Let's get right to our special guest, and that is Stanley Druckenmiller, Duquesne Family Office CEO. He's the founder of Duquesne Capital, and you manage that as well as a lot of Soros money. All at the same. I don't know how you did so much at the same time. If you don't know this man's record, and I'm not even talking about being the biggest philanthropist in the world, and I think, when was that, 2009, Stan? $800 million, but...
I can't remember about
that. Yeah, all right. Anyway, 30 years without a down market.
39.
Yeah, 39, but and average 30%.
30 years competing. We don't really talk afterward, but yeah, it is 30.
And I think after 30 years of not having a down year or getting 30% a year, you couldn't do it. I don't see how you could do it. You'd get up every morning worrying, I think, wouldn't you? And that's too much for anyone to try to beat.
There was a lot of luck in there. I had a lot of big drawdowns inter-year. It's just the way the calendar came out, so there was a lot of luck involved with that.
I've talked to you in recent days, and you had an interview that got a lot of play at the Economics Club. And so we'll start by saying, so 1,000 points today, or I'm sorry, 100 points a day would bring us up almost 1,000 for the week. So we've had a snapback, and I asked you, you sold everything, you said, you know, these headlines don't really necessarily cover the nuances of what you've done in the last couple of weeks, right? I mean, they said you sold everything and got in treasuries. Was that's not exactly what you did, is it?
No, but I did do a lot. So I was over 90% invested.
Right.
Fat and happy. Fed looked like they were going in the right direction, and the Sunday of the Trump tweet came in Monday. The market was only down 0.5 or 1%, and decided to go to net flat.
That was the first China. That was the China, not
the China
well,
tweet,
not the Mexico.
China tweet. I just kind of wanted to take a deep breath and process it. Net flat doesn't mean I sold everything. I kept all my long investments and used other vehicles to get net flat. The other thing I did was I bought a bunch of treasuries just because I wanted, and by the way, it took me 3 days. I wish I had done it all the first day, but didn't have the courage or the gumption or whatever. And yeah, that's what I did, and pretty much stayed there until the Fed repivot, acceleration, what you want to call it, Tuesday morning. I'm nowhere near back to where I was, but I've gotten a little more exposed during a week.
But you also point out, and you say a lot of it's luck. So, I mean, it looked like you said, "Wow, I'm going to ride these treasuries as they go up and the yields fall below." But that wasn't what it is. You needed to go somewhere and have me treasuries, and then all of a sudden, it was serendipity, and the treasury market just took off after you did that too, right? So it looks like another.
Soros used to have this thing called a one-way bet. What's a one-way bet? That's when you have a lot of conviction that something might not move, but if it moves, it'll only move in one direction. So I bought the treasuries thinking, for example, the 2-year, I think it was like 230 or something. If I'm wrong, it goes to 240. And you can envision a scenario where you could make 150 or 200 basis points. So I didn't necessarily think I was going to make money, but it was a great risk reward. And you're right, now that it's down to 185 or wherever it is this morning, it's no longer a one-way bet. You could lose 60, 70, still could probably make 150, so it's not like it's a bad bet, it's nowhere near what it was that particular day.
So you definitely sat up and took notice of what these tariffs might do to what you were pretty happy about, and that is deregulation, tax reform, animal spirits for the markets, all these things that happened in the first couple of years of the Trump presidency. You think this is enough of a headwind to really reverse some of all those positive things to where could we go into a recession? Could the market have a much bigger pullback than we've seen so far? Is that on the horizon? You still don't know?
Joe, the answer is I don't know. But I'm managing my own money, and I don't need to play every day. I'm not competing. And you said it perfectly. I think I called in right after my knee replacement, the day after the election.
You did.
And you guys were great. We had a discussion about how none of us understood with cutting taxes and deregulation why the market would go down because Trump had been elected. And I think we talked about animal spirits in that interview at the time, and maybe the economy could grow at 3% under this guy. And I wish I had followed my own advice more in action, but that's kind of what happened. And animal spirits is something you can't measure, but confidence matters. And you do wonder, and the Journal had a great piece on this, I think, Tuesday morning, you do wonder whether this is enough to kill animal spirits. And what do you mean by animal spirits? Well, for example, if you're a company and you're thinking about building a plant or doing capital spending, I mean, really? I mean, aren't you going to wait now, see how this thing is resolved, what's going on? But I don't know. If you calculate the tariffs, at least the one we've had, just in and of themselves, it doesn't look like it's that damaging. But at the same time, Ben Bernanke, who's a great mind, got a lot of IQ points on me, he thought subprime was contained. Because if you just do the math, same thing, the tariff thing doesn't look that damaging. But if you take all the other effects and confidence, and we've had a few more things down the road since then. We had Huawei, and 5G was going to be one of the great engines of not only U.S. but global growth. That's challenged now. We've interrupted that supply chain. Supply chains all over the world have been sort of twisted around. People are wondering. Then we got Mexico. That one came out of nowhere. So there's a lot of uncertainty. And I'd love to sit here and tell you I have a crystal ball, but I don't know. Yeah. I don't know.
You and Kevin Warsh have been watching the Fed and commenting on the Fed for a long time as well.
Probably too much, yeah.
I mean, I have so many questions about this, and I'm thinking we only have an hour. That was what just ran through my head listening to that.
Oh, no,
you know
we're going to get through everything, right?
That's what I thought again. But is the Fed still, isn't there the law of diminishing returns for what they're able to do? Have we hit that yet? I don't think, it looks like we haven't, because we got a pause, which bounced us in December, and then we got something more recently where there might be a cut, and it worked again. Is it going to always work just because it makes stocks more valuable?
No, one day it won't work. We proved in 2008, at some point, you start pushing on a string. I'll say this. I don't understand the Fed's monetary framework at all. I grew up in an era with Volcker and Greenspan where monetary policy was primarily used for countercyclical, and when the economy started running too hot after a period, they would lean against it, and when it looked like things were softening and rolling over, they would lean against that. Now we have decimal point inflation targets like it's Armageddon if it's 1.432 instead of 1.65. We're worried about inflation expectations, 5-year tier and 10 years down the road. We have a 2.0, inflation target that if we don't meet it, it's Armageddon. And I have trouble with that whole, the preciseness of it and the attention to it. As you know, Joe, we're in, well, you may not agree with me, but I think we're in one of the biggest productivity inflection booms since the late 1800s. I am very confident that it's not being measured in real GDP. I'm also very confident I couldn't measure it, so don't think I'm arrogant enough to say, but I know that we have all these free products out there that don't measure in GDP. Just a couple of examples. Somebody at MIT did a study and said the average American would pay $18,000 a year to use the Google search engine. I know I'd pay more, by the way. But here's just one little anecdote. So in 2010, Americans took, I think, or globally, took 300 billion pictures. Okay, this year, we took 2.5 trillion pictures. Okay, and the pictures this year on the phone in your pocket are better than the pictures you were taking with a Kodak camera eight years ago. And if you look at GDP accounting, all right, there is no accounting in value for those pictures. It has done nothing for GDP. In fact, you could argue, since we used to go in and pay 50 cents per picture when we went to have them developed, that added to GDP, and that's no longer in there. So that it now literally subtracts from GDP. And I could give you a million other examples. Google Maps, whatever.
I agree 100% with you.
Putting all my clients in Photomat shares when I was a broker, I was like so
real
stupid.
Growth is probably, I don't know what
you remember
it is,
those little
but
places?
it's higher than they say it is.
If real growth is higher, you have these powerful long-term trends that are working in favor of that. How is the Fed at 2.25% to 2.5% short-term interest rates restraining that? In other words, you mentioned that the Fed has sort of repivoted because it seems to want to move toward where the market is at this point. What's the difference if the Fed were at 2% or 1.5% or 2.25% to 2.5% as it is right now?
Well, because the gig economy is important, but it's not the only economy, and economics works on the economy works on the margin and on confidence, and there's a lot of whole other areas, autos, old line retail, global trade, big, that are deteriorating. And I actually think the Fed is right to be worried. I think we could be at an inflection point, and I think they'd be crazy not to think so. I have no problem with what Chairman Powell has done. I think he inherited a very tough job. My biggest problem is what Yellen did. We had a booming economy, fairly early cycle. I know I talk too much about the Fed, but at the time I said they should sneak one in every time they can until they get to some normal rate. I deeply, deeply believe in a capitalist system, you need a hurdle rate for investment. And if that rate is not up there somewhere around 3 or 4, people are going to get crazy. Investors are going to get crazy. Corporations are going to get crazy. Zombies are going to stay in business. And we had the opportunity to get there. Yeah. But that doesn't mean...
She did sneak one in December 2015. The markets kind of continued falling apart, and then they were on hold for a year.
Yeah, but we had that whole period in 2016 where, in my opinion, they could have gotten to 3.5 or 4. We'll never know, but they could have at least tried. Okay, but once confidence turns down, you know, you got to deal with the hand you're dealt. And Chairman Powell has now got a tough situation on his hands.
You've evolved.
If he was at 4, I'd say we should really be cutting, and it would be great, but we're not at 4.
But does that mean you think that there are bubbles that have built up in the equity markets and other markets around? If there are still zombie companies that are out there, have we not shaken things out? Because we haven't been at 3 or 4%. And
yeah, we have 10 trillion in corporate debt. We had 6 trillion. I think you and I did an interview for Delivering Alpha, and it was like 7.5 trillion at the time. So ironically, by trying to achieve escape velocity, we are in worse shape for a recession now than if things had slowed down when the period you're talking about, Mike, because there's been a lot of nonsense that's going on since then. Now we have the global trade situation. So you just, I don't know.
From what I'm hearing, your views have evolved on the Fed at this point. And I like what you're saying because it's a much more, I think, positive place that it puts us if it's productivity and innovation and technology that has us stuck in this low interest rate environment. And I agree with you. You said you don't know if I agree with you. I've been saying, do you know what I pay for Google Maps? What would I pay for Google Maps? It's changed my... When am I going to get somewhere? Oh, I know. When do I have to leave? I know when I have to leave because it says... but there's traffic on that route. If I had that when I lived in L.A., I would have got off the freeways instead of being... I would have saved 7 years of my life with Google Maps.
By the way, this affects inflation, too.
Yeah.
Quality adjustment.
That's why rates are so low.
If this was measured properly, we're probably already in deflation. By the way, that's a good thing. We have good deflations and bad deflations. That's my objection to the 2% inflation target for all seasons. Right. In the late 1800s, in the Industrial Revolution, we had 3% deflation, and we were growing at 8% real. So I don't know where we are. I don't know whether we're at 0, whether at 1, we're at 2. But I wish we'd stop worrying about it because we're in a productivity shock. And this thing can't be measured. So to sit there and count decimal points until at least, A, the economic statistics catch up with what's happened, the preciseness, I just think, is...
I mean, this didn't exist 15 years ago. How much is this thing worth and what this is capable of? I have the Encyclopedia Britannica everywhere I go. I mean, I don't even know what Andrew does on this
I'm
thing.
glad you mentioned the Encyclopedia Britannica because you used to pay for that.
Yeah.
And that added to GDP. So relative to now, that's a negative.
Music. I
Now,
listen
by
to
the
music
way, I'm
that I
not
don't
an
pay
idiot.
for.
I know that some of this shows up in advertising, but a lot of that is coming out of TV, and the whole value, there's no way it
But your
shows
larger
up.
point is that we're not correct, or the Fed is not correct, to fear the Japan scenario in this instance.
No, not at all.
And it explains why Treasury yields are where they are, probably.
Yeah, and this whole obsession with the zero bound, you know why we're at the zero bound? Because they put rates at the zero bound. We have never had deflation that I can find that started because we were near the zero bound. We have deflation in every instant because there was an asset bubble. So if I was trying to create deflation, like I'm this evil Darth Vader, oh, let's create deflation, I would have done exactly what the Fed did from 2012 until a couple of years ago.
I'm completely confused. Do you feel good about things right now or bad?
I'm worried about the long term because, and I don't like the victory laps about how great things are because we've used monetary policy to create a lot of buildups. By the way, I haven't even gone into what the government's done.
Well, and
Okay,
not
there's
just
no way
federal
we'd be
government,
looking
state
at a $1
governments
trillion
too.
deficit
Right.
at full employment, and no one would mind if the government hadn't been, if the Fed hadn't been running policy to enable these guys. And then you have President Trump running around saying, well, we need to keep interest rates low because the debt is high. Well, Jesus, why do you think the debt is high? And if you want the debt to explode more, just keep interest rates low. I'm concerned about the long term. As a practitioner, my central case is we're not going into a recession. I'm worried about it. And with the new view of the Fed, I'm a liquidity guy. I'm not worried. I'm not that worried about markets right now.
If we had to have a
But I'm also not that bullish. I'm not nearly as invested as I was.
bullish on
3 weeks ago.
productivity and innovation in capitalism, though. If we have to choose a billionaire to, at least we're not talking about how capitalism is broken. And I mean, there's some good things happening in terms of what innovation and what, you let the free markets work and it gets pretty exciting. Your problem's with entitlements, and it's, there's a lot of people think the answer is more government, not less government. So
I couldn't agree more. And Joe, one of the things you and I disagree on deeply is climate change.
We do.
Okay.
Yeah.
What we probably don't disagree on, and the Green New Deal is so over the top, I'm not even there, okay? But if you're gonna finance this stuff they want to do, all right, this is seared in my brain because I went around the college campuses for 2 or 3 years. But 40 years ago, government investment used to be 30 cents of government spend. Now it's 15. Entitlements used to be 28 cents of government spend. Now it's over 70.
70.
If you want to do this new stuff,
Yeah.
all right, the answer isn't to raise everybody's taxes, because in my opinion, that's going to cause damage to the. You go where Jesse James went. You go where the money is. And the money is entitlements. There's nothing productive about transfer payments, and they've got to be dealt with. And I wish the young people out there would understand that there's no free lunch. And if you want all this stuff, the answer isn't to raise taxes because you're going to kill the economy and there's going to be nothing for anybody. The answer is to take some of it from the old people like me. They're going to get. You believe I'm getting a Social Security payment? I mean, how ridiculous. That thing was set up as a safety net, and finance it through that kind of stuff.
You're not talking about just taking it away from billionaires, though. You mean taking it away on a means testing from anybody who makes over a certain amount of money.
On Social Security?
Yeah.
Yeah, and by the way, if you need to do a payroll tax that specifically addresses with that, that's okay too. I just want it addressed so the next generation doesn't get zero, And you know, it's funny. The one thing Hillary and Donald Trump agreed on was we're not going to touch entitlements.
Right.
Just amazing to me.
Well, I have to say, we're going to offer you a CNBC contributor position. So
And I
that
have to say I'm going to decline it, but thank you.
so we can have you on like every quarter at least or so. I mean, there's some money involved here with the CNBC contributor stand.
In the House, I hope they will do it. But with Republicans controlling the Senate, there is no guarantee we will succeed. What we need is Walmart, the largest private sector employer in this country, to take a bold step forward and say that all of their employees should live with dignity.
That's Bernie Sanders confronting Walmart over minimum wage, advocating that the retail giant should pay its workers at least $15 an hour. Let's talk minimum wage and much more with our special guest today, Stanley Druckenmiller, who is the CEO of Decaying Family Office. Stan, you saw what Bernie had to say. You were watching this week as it was coming out, and you sent us an email because it got you a little fired up. What do you think about it?
Well, first of all, on the minimum wage, we just had a discussion about innovation. We didn't go into the cloud. And to me, the choice is, it's not minimum wage versus a wage, it's minimum wage versus no wage. And if you want to hurt workers with what's going on with the alternatives with technology, jack the minimum wage up enough and you'll have job losses as a result. So it doesn't make a lot of sense to me. But the thing that really enraged me that Comrade Sanders said was his comment about charter schools. I've spent the better part of my life, one of the great joys of my life was meeting Jeff Canada. It's funny, I was talking to Fiona last night. To have met Jeff Canada and Ken Langone and have them both in my life for over 30 years, I mean, what a privilege and what luck. But getting back on topic, when he says he's against charter schools, I know the man just doesn't care about inequality. All he cares about power, because that is disruptive to the African American community who prefers this. And the only way you get out of inequality is with education at the early level and giving everybody in this country a shot. And believe me, this myth about pulling up your bootstraps and, I'm going to make it, that's fine for 95% of the population. But there are communities out there where these kids have no shot because the public schools are just so terrible, they're never going to be able to compete in our economy. And for Sanders, I assume he's in the pocket of the teachers' unions. I don't know why he said it. But how in the world can you be against charter schools if you're serious about the inequality issue?
And we should tell people about the work you've done in Harlem. How long have you been there?
Well, I've been there. I met Jeff in 1993, but it's Jeff's work. It's not mine. But we're serving 13,000 kids and 25,000 families in 100 blocks of central Harlem. We've moved the needle on every single metric. And Becky, if you just even drive up there, and I showed you pictures of 25 years ago, you won't even believe what's happened in the community. Our biggest problem is gentrification, which is a high-class problem relative to what we're looking at. And what's really cool is the Harlem Children's Zone model, which, by the way, Jeff invented, not me, is being replicated in communities all over the country. Obama's Promised Neighborhood started it. So we're not just affecting like 13,000 kids up there now. It's becoming a nationwide thing, and I think it's one of the answers, to the whole inequality issue. So it's very exciting.
When you see hundreds of millions of dollars poured into a system like the Newark school system without really decent results to show for any of that, what do you think?
It broke my heart, but I hate to say it because I know you're going to have viewers who passionately disagree, but I'm just not a believer in government being the most effective actor. And this whole tax debate is interesting because I really do understand why people want higher taxes, and they think that's the solution to inequality. But you also need to understand I'd much rather have a Jeff Canada implementing programs and use his talents through private sector donors and donors that hold his organization accountable rather than letting the government deal with it.
Just to be clear, you think that's a solution for the 5% of communities where you're not getting decent public schools, correct? You don't think that this is something, I mean, I'm a product of the public schools for most of my life. My mom was a public school teacher. My kids are in public schools.
We are in the public schools in Harlem.
Yeah.
We're not, one of the big misperceptions about Harlem Children's Zone is we're a charter school network. Mm-hmm. That's a small piece of what we do up there. We have baby college. We have pre-K. We have employment and technology centers. You know, basically from cradle to college, we're all over these kids and all over the process. But we deeply believe in public schools. So that's not what I'm talking about here. I'm just saying that there are kids that need a shot, and it cannot be done just through charter schools. And by the way, if they're charter schools that are not performing, they should be shut down.
What do you think of Bernie Sanders and other candidates who are now on the campaign trail basically saying you need free college, you need universal basic income, you need universal health care? How do we deal with those issues? And what happens in an environment where things are so charged?
Well, I just don't believe in any of that. I mean, one of the problems with college is it's been subsidized now through student loan programs. And what's happened? It hasn't helped the students. The colleges just keep raising their prices, and these students come out and they're in debt. Look, all this sounds wonderful, Becky. Universal health care, free colleges, but you got to pay for something. And, you know, I started my career in the 70s. There were a lot of people that thought the Soviet Union was the answer, okay? I've watched socialism in various forms my whole life. The latest example is Venezuela. And the people that will like socialism and think this is the way to go, they should go down to Venezuela. Actually, they shouldn't. They'd probably be shot. Ken Langone was with me last night, and he pointed out a statistic I had not heard. The average Venezuelan lost 34 pounds last year. I mean, that's what you're dealing with. And look, I know capitalism isn't perfect. I know there are issues. But the alternative is absolutely, I've seen this movie before, and I don't want to go down that route.
Although the alternative that is being presented is not centrally planned dictatorship like in Venezuela. It is a bigger safety net or widening out entitlements and having it paid for through higher taxes. I mean, not to say that...
It's through government, though, Mike.
Of course.
It's through government. I mean, the healthcare system, to me, very simply, they want Medicare for all. Medicare is going to go bust. Okay, so let's make it even worse, and let's do Medicare for all. Why is Medicare going to go bust? Because the way the thing works right now, we don't know what we pay for our health care. And until you have consumers have choice and understand when they go to a doctor what the cost is, and there's some kind of choice, this thing's just, it's not going to get better. So, yeah, I understand what you're saying, but I've seen government in so many forms. I mean, I'll give you just one small little anecdote. So when we started the pre-K program in Harlem Children's Zone, we had our little thing called Harlem Gems. And I'm very proud to say that in 12 years, and like 15 to 20% of the kids are homeless, got a lot of special needs kid. One child, one out of 12 years of kids has not been school ready at kindergarten. So it's a great program. So we start this thing, takes us about 3 to 6 months to get it started up, off we go. And across the street, we get Head Start money. And believe me, I love the Head Start money, and I think it's a great program. It didn't take us 3 to 6 months to start it up. It took us 6 years. And we fill out a questionnaire every quarter. 1,700 questions from the government are we complying with. Not one of those 1,700 questions is about student outcomes. Now, is the Head Start better than not having anything at all? Yes, and those kids are having the same outcomes as the kids across the street. But I'm just talking about
the delivery
my whole life,
yeah.
Everything where you get government versus the private sector involved, the answer has always been the same. I'm going to shock you. I kind of agree with Biden. I don't really think capital gains promote investment as much as advertised out there. And it's hard for me to believe Larry Page and Mark Zuckerberg and Jeff Bezos would have said, "Oh my God, the capital gains tax is going to be 35%. I'm not going to try and found Amazon or Google." So I don't have a problem with it.
But you'd probably want to, you wouldn't want to expand entitlements. You'd probably want to fix entitlements and debt with the
Yes,
money
Joe,
we
I'm
raise.
still a conservative. Don't worry. I don't want to give you a heart attack over there.
But
I would also not be giving like tax breaks for buying used corporate jets. I get the new jets. Okay, somebody has to make them. You get employment, you get all that. But used jets, so there's all kinds of stuff in the tax system.
Yeah.
The problem with the capital gains hike, and I don't really know the answer, is it might not raise that much revenue. And,
Right.
and I'm not into something just because it's fair. But frankly, I think I kind of agree with Biden. But I did want to say this. You know how we could solve inequality very easily of wealth? Just do something disastrous to the economy. The stock market would go down 40%.
Well, that's what worked.
And inequality would drop substantially.
It fell in 2008. That's exactly what happened.
Of
We had the
course.
biggest decrease in inequality since the 1970s.
And that's the problem with this whole argument today. I mean, a little known fact, because the media doesn't want to put it out there, is real wages have gone up under Trump. It's the first time it's happened, I think, in 40 years. And we all know African American employment is up because President Trump tells us every 10 minutes. We all know other minorities. And so the bottom is doing better. The problem is the top, the differential is getting even bigger. And even though it's one of the seven deadly sins, one of the most powerful human emotions is envy. So the narrative about inequality is correct, but one piece of the story is left out, is that everybody is doing better. Unfortunately, the people that are really accelerating. So I don't believe the way to solve this is let's just ruin everything, and then everybody will be worse off, but we'll be more
Right,
equal.
but the inverse of that, which is that conservatives say, well, growth will solve everything. In fact, during high growth periods, inequality increases. So it doesn't solve inequality. I am shocked, though, that you're saying you would support a higher capital gains rate. You're a guy that I would guess makes a large share of your income from capital gains, right?
I wish. I'm too short term, but I have had substantial capital gains, but it's not.
So has that changed for you? Was there a time when you wouldn't have, but now you?
I've never been big on.
What should the rate be? What do you think is a fair rate for you? Should it be taxed the same as income, 37%? There was a time when they were the same.
I wouldn't have a problem with that, but then don't tell me you're going to raise the 37 to 50 and it's going up on both of them.
Right.
Okay. As far as I'm concerned, they didn't do tax reform. Okay, we did some tax reform in '86. This wasn't tax reform. If anything, the thing became even more complicated.
Yeah.
But I would have no problem with normalizing capital gains. I hope I'm not wrong, because I could be. To me, you don't want to raise any taxes unless you're going to raise revenue. I don't want to raise capital gains taxes because I want to hurt somebody.
Do you think the marginal rate is at the right level right now?
I don't know. I'm a Laffer curve guy. I don't know where we are. You know, we know it's between 0 and 100. I don't know which it is.
But do we need to, you mentioned 70 cents of every dollar. I mean, that's a problem, is it not?
What's 70?
Who's paying
on the
70?
On the
entitlements?
entitlements. I mean, if we do anything with increased revenue, I mean, spending should still probably be cut, and we need to address entitlements.
We
do
don't
not?
even need to cut entitlement spending. We just need to slow them down, or make them grow at 0, and all
Not
our
exactly the
problems go
plank
away.
of the leading 22.
They all went up over 5 or 6% last year, with nominal GDP growth less than that. They're still gaining. And by the way, we haven't even gotten into the really demographic, the gray boom spot I talked about 12 years ago, if you remember. I'm sure you don't. I thought the real consequences won't show up until 2025, 2030. I said this in 2012. Well, it's not 2025 yet, but we're getting there.
And we talk about it quite a bit, especially with, as I just said, I mean, if you look at the basic thrust of the 22 clown car, I shouldn't say clown, but the 22 Democrats that are running right now, it is entitlement expansion. That's the whole thing. But the big debate in this country right now, because of a lot of this, is on whether socialism is effective. We've interviewed, versus capitalism, we've interviewed a number of people and some billionaires on this program to get their take on the issue. JP Morgan Chase CEO Jamie Dimon defended capitalism in much the same vein as our guest host in an annual letter published in April, writing, "I'm not an advocate for unregulated, unvarnished, free-for-all capitalism, but we shouldn't forget that true freedom and free enterprise, capitalism, are at some point inexorably linked. Socialism inevitably produces stagnation, corruption, and usually tyranny, actually, often worse." He didn't say that, I did. A few days later, or a few days after Dimon published that letter, billionaire Ray Dalio spoke out about this very same issue.
I didn't say broken. I said that it needs to be reformed. I'm a capitalist. I'm a professional capitalist. The system has worked for me. I didn't have anything, and then I got something through the capitalist system. And capitalism means the ability to save and invest in capital markets and private enterprise and all of that, and I'm supportive of that.
I'm not really sure. We tried to pin him down on exactly what he wanted to do with it, but I mean, comments on, I don't know if you saw the whole interview with Dalio.
I didn't see it. Let me just say again, look, capitalism isn't perfect.
Yeah.
But it's lifted billions of people out of poverty. And to me, it's proven to be the best system we've had. My problem with today's narrative is we're not doing capitalism right now as I see it. We've been moving further away from it. We're moving further away through free trade. We're moving further away through manipulation with crazy monetary policy. We have all this crony capitalism with lobbyists in Washington. So for the last 30 years, I think we've been moving further and further away from what I would call capitalism. But that's not the debate. The debate out there is capitalism versus socialism. And we've seen that in movie, and we know how it ends, so I don't get it.
You talked about Google, and we need to bring up what also has been happening lately, and that is the big, I guess, pushback against how great these companies are, how well they do, how big they are, how much of their lives they're involved with. But capitalism produced some of these great innovations. Are these guys too big, too powerful now? Do we need to take a look?
Look, they're big, but first of all, let's go to, they've now got enemies on both sides. Let's take President Trump first. I don't happen to be a nationalist, and I don't know what I think about, I'm what you hate, I'm a globalist, okay?
Right, okay.
And I don't know what I think about economic wars. But if I was going to have an economic war from China, with China, and I was a nationalist, okay, the last thing I would be doing would be attacking our best companies for the next 30 years who are going to be in that fight, which are the AI leaders, Google, Facebook, Amazon. While you'll notice, Joe, about a year ago, they had kind of gotten quite tough with the private sector, the Chinese had. And then the minute the trade stuff happened, they pivoted. Okay, they got rid of Jack Ma, but then they became very friendly to Alibaba. They've started to reduce restrictions on all the stuff that Tencent does. We all know what they do with Huawei. So they're oiling the companies that are going to compete with us in the next 30 or 40 years, because let's not be naive. This is all going to be about AI and technology. And what are we doing? We are attacking our companies that are the leaders in this stuff, but man, it's great. We're supporting our steel industry, our coal industry, our aluminum industry. Way to think about the future, President Trump. Just genius. Now, let me take the other side. So we have the Democrats out there, and President Trump, we all know his motivation is these are all left-wing liberals out there that run these things. His words, not mine. So now the Democrats hate them because they're convinced that Facebook's platform got President Trump elected. That's complete nonsense. I mean, whether you like it or not, President Trump won the election because more people voted in the right states for him that voted for her. And the Facebook ads are just dwarfed by anything else. So I just do not understand the emotion over this issue. Then you've got the whole privacy argument. And very simple to me, if you don't like what Google's doing with their privacy, don't use Google. Okay, don't go on it. Don't go on Facebook. And good luck to you, by the way, if you want to go to another search engine. The woman from Denmark who keeps going on, you could put Google on the 4th page and they'd still use it compared to the other search engines competitive. Because I'm old enough and stupid enough, I hit the wrong button and I get trapped in one of those search engines. And like I go crazy how bad they are, and also that I'm too stupid to know how to get out of it.
But you're pointing out how powerful they really are. And do consumers have benefited? Have startups been hurt by monopoly power of these big companies? Is competition being hurt where around the edges we could make it, I don't know, make some changes that make it fairer?
Yes, I think they're
possible.
Look, I'm a capitalist, and you can have monopoly power that becomes punishing for capitalists. And we've never had to deal with the networking effect which the internet has created. And absolutely, when you see acquisitions made to eliminate competition, that's to be seriously thought about. But the narrative that Google is gouging on prices, well, first of all, their products are free. So how are you gouging on prices? And they're anti-innovation? I mean, this is one of the most innovative companies in the world. If there's a reason not to own as a stockholder, is they're spending so much money on crazy stuff trying to advance science in the world. So I don't like that narrative either. But I do agree. Yes, if they're buying companies to eliminate competition, there's stuff we can do there.
You make a persuasive case that we shouldn't be targeting these companies. As an investor, as a trader, though, what do you foresee in terms of whether it's going to affect them in terms of restraining their valuations? I mean, if you had to say, do I fade this trend and think it's going to blow over, or do I think it's going to be with us for a while?
Well, Mike, I don't think they're going to break up Google, but if they do, it would be worth more.
Probably.
I mean, the sum of the parts would be worth more. Facebook would be worth less, because obviously Messenger and the platform, that's all integrated. Amazon, you could argue, would be worth more. You got AWS sitting over here, probably worth, what, $500 billion by itself, and this going on. So I think it's debatable. It does make, obviously, investing in all of them more challenging. It's over the head, but we'd have to change the law, as I understand it, literally change the law, which is going to take years to win a monopoly case against somebody whose products are free.
Well, they're free, and you don't give them anything. You don't give them exclusive right to put wires in your house. Right? There's nothing like that.
I don't want to run out of time, but so if Trump had not, you're now worried that he's going to, I don't know if you're worried, but you think he's going to lose because of screwing up all the good things he did with tariffs and the trade war. You're worried?
That's not why I think he's going to lose. I think he's going to lose because I've analyzed the data in Pennsylvania, Michigan, and Wisconsin, and I think he's in bad shape. I think he will win if he runs against Comrade Sanders or Elizabeth Warren, but I think it's very, very difficult for him to beat any centrist candidate when I look at the county.
Because of the tariffs or because of something else? Because the tariffs are hurting the auto industry or other places?
I'd say a lot of it, Becky, is because of behavior. Soccer moms, he doesn't need to lose one. Don't forget, he won these states by less than 0.5%. Right. My old stomping grounds, Pittsburgh, has gone blue because high tech's moved in there and it's booming. Pennsylvania is tough, and he doesn't win without Pennsylvania.
You think,
But yes, Becky, one more thing. He and Pence keep talking about the booming economy and the booming this and the booming that. If you don't think we're going to be booming in 18 months, and that's clearly a risk, I don't see how he wins because I don't know what the narrative's going to be.
If you think it more likely, I guess, a Biden or a moderate is the candidate, but you're.
No, I don't know who the candidate is.
But if
I have
if
no
one of the
idea.
crazy ones did win and did win the election, he calls them the crazy ones. He does calls them crazy. I know you want your entitlements and you want your safety net expanded. And
No,
everything.
I thought.
No, I
didn't
know,
think
but
being crazy was a liability. In
all right. But if they do, you think that would be bad for the stock market if Bernie or Elizabeth?
Sanders became president, I think stock prices should be 30 to 40% lower than they are now. The good news is we'd all be much more equal because everybody would be poorer, but the rich would have lost a lot more wealth than the poor would have.
And you have no idea whether they run someone like that or whether that person could win. You think I don't think Bernie Sanders could win the general election, but I could be wrong.
I don't either, but stranger things have happened. The young people love him. The young people, by the way, how can you be under 30 years old and vote for Bernie Sanders, who wants to give more money through more entitlements to old people? I just don't get it.
Right. Old people that could be living to
Me.
Yeah, they could be living much longer, and they're going to have
Hopefully
to
we're going to
support.
live to 100, Jim.
Yeah, and they could
bankrupt
support
the whole system.
Yeah, bankrupt the entire system.
Stan, thank you.
Do you think? I think we're going to go a little further.
are we? Okay.
Yeah, we're going to go a little further.
Sorry, my bad.
All I want to get to here is back to the market outlook and what's most likely, and it's always just percentages. And do you think that somehow Trump is able to successfully deal with both China and Mexico in a way that the stock market can take advantage of these lower interest rates and head higher?
I feel very strongly that the secular growth companies, cloud, payments have enough runway that they can grow just as fast in a 1% economy as a 3% economy, and those companies are unequivocally worth more with rates at 2.15 than they are with the 10-year at 3. I also feel very strongly that there's a risk that the economy slows down a lot. We'll see, and if it does, there are a lot of cyclical companies that are worth less if interest rates are 2.15 than 3 because they have negative earnings leverage affecting them.
Very quickly, you said that you were 90% invested until that early May tweet about China tariffs, at which point you bought a lot of treasuries, closed out some positions. You came back in earlier this week.
Only a little bit, unfortunately. I wish I had bought more.
But you came back in early into the equity markets a little
Just a
earlier
little
this
bit,
week.
yeah.
What percentage, if you were at 90% before?
I'm at 15, and you're a very smart lady, but it's not a great question because I could be very different on Monday, and your viewers should take nothing I say on Friday with seriousness about where I might be on Monday or Tuesday.
Well, if you came back on the show, we'd
Get a daily
update us on update us on what you're doing. Anyway,
Jobs numbers important today?
I think they're very important. There's a technical thing when you have 5 weeks in May that could bias the number upward, the seasonal adjustment. They're important only because they affect the Fed. I don't use the job numbers to predict the economy. It's just unbelievable, the obsession with a lagging indicator. I use them for entry and exit points to fade. But I think if the job number is weak, given everything else they're saying, the Fed will be on a clear easing path by July.
Stan Druckenmiller, thank you for spending so much time with us. Long time coming, a lot of begging, a lot of whining, a lot of cajoling, a lot of, but thank you.
Thank you, Joe, and thank you for the opportunity to talk to your viewers. It's been a lot of fun.
We've really appreciated having you here.
Thank you.
It is a lot of fun.
It is.
I hope it was a great experience for you.
It was wonderful, Joe.
We have to wait a long time for that anyway.